Cathie Wood's warning to all stock market investors. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we are going to be taking a look at Cathie Wood speaking all about deflation. So Cathie Wood has been one of the primary contrarians in regards to the inflation-deflation debate that's been going on over the past year. She disagrees with quite a bit of what the Fed has been doing in regards to interest rates and has some interesting views. Last week, she cautioned investors in a webinar that the Fed's push to raise interest rates will prove a mistake and that she is more concerned about deflation or prices actually falling. So today we're going to be speaking about this because we've had some interesting things happen. We've seen ARK Invest buy quite a bit last week. We've seen Cathie Wood's contrarian deflation call getting endorsement from Elon Musk and Jeffrey Gundlach, and we're going to take a look and see what's happening. The next Fed meeting is happening very soon this week on Wednesday, I do believe, is when we will get our next rate hike information. It's expected to be 75 basis points. There's about a 15-16% chance of a 100 basis points hike. So it's going to be quite a scary start to the week for all investors. Quickly, my friends, could I please ask you to hit that like button for me? Really does help me out an awful lot. I appreciate all of the support in the channel. Hope you've all had a great weekend. So first of all, what is deflation, my friends? Because some people still get it a little bit confused. Deflation is a fall in the overall level of prices in an economy and an increase in the purchasing power of the currency. It can be driven by an increase in productivity and the abundance of goods and services, by a decrease in total or aggregated demand, or by a decrease in the supply of money and credit. So it would make sense as to why Cathie Wood thinks we're going through more of a deflationary period than an inflationary when you look at the portfolios that ARK Invest is in. When you look at that reason that deflation can be caused by an increase in productivity, or a decrease in overall demand, or a decrease in the volume of credit in the economy, the increase in productivity is one that's going to come through a lot of innovative companies, the likes of which ARK invest very heavily in. If you take a look at some of the companies that ARK is invested in, the heaviest, you're going to see the likes of Tesla, you're going to see Roku, we're going to see Zoom, we're going to see the likes of CRISPR, Teladoc, Coinbase, a lot of innovative companies. And over the last week, Cathie has been getting a few high-profile supporters, even as prices pressures continue to surprise the upside. Jeffrey Gundlach and Elon Musk recently joined Wood's camp in calling for a decline for prices, expressing worries that the Federal Reserve might go too far. Now, that is the primary concern for these people right here. The so-called bond king, Jeffrey Gundlach, warned of deflation risk on Tuesday, urging investors to buy long-term treasuries. Meanwhile, the Tesla CEO called falling commodity prices neither subtle nor secret, and tweeted to his 100 million followers that a major Fed rate hike risks deflation. And we can expect a major Fed rate hike, and we can expect multiple to come if things don't change. Wood went on to say we are getting some loud voices now accompanying us on the deflation risk, and she most certainly is. Wood has been warning about deflation since last year on the belief that disruptive innovation will push down the price of obsolete goods and artificial intelligence will help reduce production costs. So again, guys, that's why Wood is, heavily biased in regards to being able to call deflation here anyway. It is really what she believes is going to happen. And it's clear to see that she does believe it's going to happen and she's not just calling it for the sake of it. When you look at, her buys, we even see this. Look, Cathie Wood and her ARK Invest management firm are using the recent stock market sell-off to go on a buying binge, snapping up shares of nearly 30 companies. This was just last week on Friday. Now, some reasons why they believe we are in a deflationary period as well. The ARK CEO noted that gold, traditionally an inflation hedge, hit its peak more than 2 years ago. Other commodities including lumber, copper, iron ore and oil have all dropped double digits from their high. She stressed that inflation is less dire than it was in the 70s as it's triggered by temporary supply chain disruptions during the pandemic. And this is a very good and very important point. Markets are betting the central bank would raise benchmark rates by at least 0.7 percentage points next week. As I said, this is expected at about an 85% likelihood, 15% or so for a 100 basis point hike. This would take the Fed funds rate to its highest level since early 2007. Tesla's Musk responded to a Twitter thread with Wood Wednesday that the central bank should drop 0.25%. Gundlach said the Fed should hike only by 25 basis points as it might overstay the economy with a jumbo rate increase. He added that the central bank hasn't paused enough to see what impact the previous hike has already had. And this is a very good point that you don't really see many people speaking about. whether it is analysts over on CNBC and Yahoo Finance, or whether it is standalone analysts on the likes of Seek and Alpha. You don't see many people speaking about this, and it's hard to even know what real effect they are having as of yet. In spite of the fact that the narrative today is exactly the opposite, the deflation risk is much higher today than it's been for the past 2 years. I'm not talking about next month, I'm talking about sometime later next year, certainly in 2023. Now again, I'd like to point out that Cathie Wood is a contrarian as of right now. Most people are just on the inflation bandwagon. And here's one, September 15th. Ray Dalio says, watch out for rates reaching this level because Wall Street stocks will take a 20% hit. And this level is not particularly far away. I estimate that a rise in rates from where they are to about 4.5% will produce about a 20% negative impact on equity prices. The Fed has already raised interest rates 4 times this year for a total of 2.25 percentage points. We expect that to go up to a total of 3 percentage points mid next week. So that will be considerably more than halfway to where Ray Dalio thinks they have to go to see a 20% negative impact on equities as of right now. And if that's not bad enough, Dalio thinks interest rates could reach the higher end of a 4.5 to 6% range. That is a relatively scary thought. This will bring private sector credit growth down, which will bring private sector spending and hence the economy down with it. As for what happens when people start losing money in the markets, the so-called wealth effect, he expects less spending as they and their lenders grow more cautious. The upshot is that it looks likely to me that inflation rates stay significantly above what people and the Fed want it to be. While the year-over-year inflation rate will fall, that interest rates will go up, that other markets will go down, and that the economy will be weaker than expected, and that is without consideration given to the worsening trends in internal and external conflicts and their effects. So really guys, whichever side of the coin you are looking at right now, things don't look the absolute best, and that is why again we're not seeing the most inflow into the markets in general. We're not seeing the levels we have seen, mid 2020s, even early 2021s. Now we are still seeing a lot of buying from the likes of Cathie Wood and ARK Invest at the time. We saw hedge funds actually outperform broader markets last week, which could be a sign that, some growth sectors, some smaller sectors are outperforming general markets again, which is, quite an exciting thing for the retail investor who does manage their own portfolio and has more of their money tied up in these higher potential stocks. But that, my friends, is Cathie Wood's warning to investors as of right now, to not just take inflation at face value. And me, somewhere I do genuinely sit somewhere in between, but I don't think it's black and white whatsoever. I think there are some deflationary trends happening and some inflationary. The increase in productivity could bring deflation to certain sectors, certain parts of the economy, but others, simply put, are in an inflationary period. But anyway, my friends, if you watch this video all the way till the end, you are a true legend, and I really do appreciate you from the bottom of my heart. The support on the videos as of late has been fantastic, so thank you. If you did enjoy the video, maybe got some value, some insight, please do hit that like button, drop me a comment down below and subscribe if you're new around here, because again, all of that helps me out so much. Anyway guys, I hope you all have a beautiful, blessed day. I'll see you in another video very soon. Peace.